In this video, we'll be taking a look at a few chart analysis to get you prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And just to let you know, tomorrow, which is Monday actually, we'll be launching our community-wide trading challenge, where we're going to pick 3 winners who are going to share a prize pool of $200. So the first prize is going to be $100, second prize is going to be $60, and the third prize is going to be $40. The challenge is going to last for 2 weeks. If you're interested in getting involved with that, it's just a way for us to build some certain skill set within our community. And if you come out on top, you're going to win $100 or $60 or $40. So it's going to be a total prize pool of $200 starting tomorrow. So we have all the instructions and the criteria to be a part of this challenge in our Discord community. So use the link in the description below to join our Discord, where you're going to find all the information you need to take part in this trading challenge. You can also ask questions freely within our Discord community, and you're going to find all the help you need over there, right? So this is an opportunity. You only require demo accounts to participate, so you have nothing to lose but one of 3 prizes of a $200 prize pool to gain, right? So without further ado, let's get started. This is a go chart on the 1 hour time frame, so I'm not going to deep on charts analysis today, because I think everything is pretty straightforward, and we're going to see how we can take advantage of the price action that evolves from what we're going to be discussing today, right? So this is the 1 hour chart on gold. If you take a look closely, we seem to be in a descending channel. So last week we talked about possibility of price bouncing off of this area of value, so which is what I've just drawn on the chart right now. So we didn't highlight this channel last week, so I'm going to get rid of this for now, right? So this is what we had. We talked about the possibility of price breaking down, going lower, or bouncing up. So we did get a good bounce. So if you got that, that's probably going to give you around 200 pips. So this is what I'm talking about. So taking a look at this price action, this equates to a bullish divergence, because on the RSI we had what we know as lower lows, right? So excuse me, I'm just gonna adjust this chart a little bit. Yeah, so last week we had a bullish divergence, RSI making higher lows and the price action making lower lows. This was a good bullish divergence for a nice bullish trade, right? So if you took that trade, this would have given you approximately 250 pips. That's if you exited your trade early. But unfortunately, we saw a massive reversal, right, to the downside. I think this has to do with some fundamentals from the United States, which results from the ongoing heats with the US election. Some presidents or a president, stepping down, letting the vice president take over. So that's by the way. What I'm trying to say is we had our bullish momentum short-lived and a bearish sentiment kicked in, which sent price downwards, taking out these lows, right? So now the new outlook is, same price within a descending channel, which means there's a good chance we go lower or we go higher if price decides to break out from this descending channel, which is this blue channel I just placed on the chart, right? So here's what I'll be watching out for to go long on gold. So I'm going to wait for a move to the upside, a good consolidation around its price levels, and then a bullish breakout to the upside. So this consolidation is going to seem like a bullish flag or a bullish continuation pattern. I'm going to enter the trade at a break of the channel, also at a break of the consolidation. My stop loss is going to be underneath the consolidation that leads to the breakouts, or this one or this one. Either way, depending on how the market decides to form the pattern that leads to the breakout. First target is going to be around this price level. Take out some profit, adjust stop loss to entry to safeguard your trade. And second target is going to be here, and we trade the rest of our positions as we go higher. So this is the reason why we safeguard our trades. So assuming you took a trade over here, hoping price is going to go to the all-time highs or these highs, if you had adjusted your stop loss to your entry like I did, then on this unexpected reversal, you wouldn't have lost any money, right? Because your trade probably closed at break even. But if you just let your trade run without, adjusting your stop loss to break even, then this reversal would have probably caught you off guard and made you lose money, even though your trade initially was a good trade, right? So that's the uncertainty we deal with in the market. That's why you have to play it safe no matter what. Safeguard your trades when you get the opportunity to do so. So for the bearish case scenario, like I said, I'm not going to spend much time on these charts because they look clean and easy to understand. So for a bearish case scenario, I'm simply going to see if this price action repeats itself, right, or something similar. You can see if you take out this area of value, you can see it turns out to be a consolidation and a bearish flag resulting from this massive move to the downside. So if we get something like that again, so which would translate to having price breaking these lower lows like this, so we're going to get something like this, possibly a breakout. So if we get this will be another confirmation to go short, right? Your stop loss is going to be above the highs and above the channel. Take profit target is going to be around the lows of the channel. So this one case scenario to go short. I'm going to show you another case scenario to go short as well. So we can also go short by taking this level as a valid area of support, right? So you can see, excuse me, my chart seems a bit laggy. So yeah, we can take this as a valid area of support and simply wait for price to consolidate and do its thing over here and see if we get a good breakout. So if we get a breakout from this area of support, this will translate to a solid entry for a short position. Stop loss is going to be above the consolidation, at least at the breakout, and target is going to be around these lows if we do get there. But remember, the secret to trading is trying as much as possible to mitigate risk, and the way to do that on this chart is adjusting your stop loss to entry when we see price moving towards a significant level away from your price entry. So this is how I'm going to trade gold this week if it happens. So first case scenario, bullish case scenario, waiting for a consolidation. Just to recap a little, consolidation followed by a bullish breakout. One bearish case scenario, I think that's the only bullish case scenario I have right now, right? Not until we break out from this descending channel, I'm not going to be going long, right? So even if we come here, we'll probably get a bounce. It could simply be a small consolidation on the support level to get a bearish trade opportunity. So I'm only going to go long if or after we break out from the channel. So my bearish case scenario is waiting for price to consolidate around the support level and then give us a bearish breakout, or give us a similar price action we've seen in the past, which is what we have over here. So it's going to look like this, like this, and then a breakout to the downside. So this is also going to be a good case scenario to go short, which will also give us a tighter stop loss. So this is it for gold. This is what I'll be watching out for my bullish case scenario and bearish case scenario. Other than this, I'm just simply going to wait and watch what the market does, and we'll take it from there. If anything changes, I'm also going to leave my thoughts in our Discord community. Please don't hesitate to use the link in the description below. Moving on quickly, we're going to be talking about Nasdaq, right? So Nasdaq presented itself with a very solid trade opportunity last week, but unfortunately I missed it. Last week we talked about the possibility of price taking out this area of support, and I told you I would try as much as possible not to miss this trade, but unfortunately I did miss it, which hurts me till now, right? But you know what they say, the market will always present us with better trade opportunities. So let's see what happened last week. So we had a good bounce, right, which also led to a bullish divergence. So you can see price creating lower lows and the RSI creating higher lows. So you can see from over here, right, higher lows, lower lows. So going long over here like this, I'm going to get rid of this so I can properly explain what I'm talking about. So going long following this pattern, so this seems like a falling wedge with a bullish breakout. So going long over here would have been a good trade, right, which turned out to be. So when we got here, adjust the stop loss to entry as usual and let the price or the trade run. But unfortunately, exactly what happened to gold happened on Nasdaq, which saw price going to the downside. So if you reevaluate your chart, you can see this led to a bearish flag, a bearish continuation pattern, right? These things happens. That's why most times when I take my trade, I go back to the chart and take a look over and over again, because the market is always changing. Your once perfect analysis may turn out to be nothing, right? Doesn't mean you were wrong the first time. It only means the market changed and you weren't paying attention enough to notice these changes. So that's what happened to me. I got out of the trade because the price reversed to my entry, and I didn't carry out another analysis to see what was happening. I just got out of the trade and let the chart be, only to come back later to see that, wow, this was a bearish continuation pattern, and I could have made a ton of money with this trade. Despite my analysis says there's a good chance we break out from this support level. But that's by the way. So we had a bearish move, consolidation, which is a bearish continuation pattern, a good breakout for a good entry, and we had price going all the way down to, I think this was around what, 900 pips. 900 pips, guys. That's kind of like, you know, everything you make in a month on one trade. So what I'm watching out for to go short is waiting for more consolidation, right? Another bearish continuation pattern, and then a bearish breakout. So similar to what we have over here, but it may not be exact. So I'm going to take out the lows, right? I'm going to take out the highs. So this could be a bearish flag, it could be a rising wedge, a bearish breakout, it could be a symmetrical triangle, it may be a descending triangle. Whichever price pattern or chart pattern forms, we are just going to watch out for those and wait for a breakout. So if we get a bearish breakout after the completion of the consolidation, I'm going to go short. Stop loss is going to be above the consolidation, at least the breakout as usual, and my take profit target is going to be around these lows, which is our next immediate area of support, right? So this is my bearish case scenario for Nasdaq. As for bullish case, it's so difficult to be bullish right now because you can see a shift in market structure. Over here, we saw price creating higher lows, higher highs, and all that. Now we can see price creating lower lows and lower highs. So which means we may be turning this trend around into a bearish trend. But for how long, we do not know currently, right? So that's the reason why to go long, this is what I'll be watching out for. You know, I won't just give you one side of the coin and let you be. So I'm going to take these highs, right? So I'm going to take these highs like this. So this is a trend line, which is going to act as a sort of guide towards, you know, price movements as we go lower or as we get bounces off of individual price levels we get to as the price action evolves. So for a bullish case scenario, I'm simply going to wait for price to come into this area of support. If it does, I'm going to wait for a good consolidation, which is probably going to hit this trend line, and wait for a proper breakout from this trend line to go higher. So this is what I'll be watching out for to go higher, to go long, excuse me. Other than this, any long you try to take underneath this trend line may be short-lived when price touches the trend line, right? So that's why I'm going to be waiting for price to take out this trend line before I consider going long. And price may take out this trend line even without coming to this area of support. So we may get something like this. So we may get a consolidation, right? Like this, and then get a bullish breakout. So this may give rise to a resistance level, which would mean a breakout from the resistance level and also a breakout from this trend line. So either of these situations is what I'll be watching out for to go long on Nasdaq, right? The reason is because if you were to go long like this, so let's say for example you get a trade opportunity, let's say to go long over here, for example, you may see price touching this trend line and reversing to the downside. So let's say you want to do something like this, right? So let's say you get price doing like this, excuse me, yeah. So let's say you get a falling wedge with a bullish breakout and price is still underneath this main trend line. You may see price popping up a little, giving you a clear signal of a bullish trade opportunity, but that bullish trade opportunity may get short-lived because of this trend line on the upper bound of the bearish movement. So that's why I'm going to be waiting for a breakout from this trend line before I consider going long. So that's it briefly for Nasdaq. I've just explained my bearish case scenario, my bullish case scenario. Please leave your thoughts in the comment section on what you'll be trading or how you'll be trading Nasdaq with of course, a picture of your analysis. You can also do that on our Discord using the link in the description below. Moving on, talking about USD-JPY. USD-JPY, I haven't talked about this in a very long time, but the chart looks sweet because we just got a reversal back to this area of resistance, right? So we have 1, 2, 3 consolidation, bullish breakout. So this is a valid area of value right now. So there's a good chance we see price consolidating and then moving upwards. So this will be a very good trade opportunity in my opinion for those trading currency pairs. Like I said, for now I'm staying away from currency pairs. I'm sticking to my gold, Nasdaq, and crude oil. Just not going to touch currency pairs for now because their risk is not just worth it in my opinion, for me, for my style of trading, right? So if you're trading USD-JPY, this is what I'm watching out for to go long, right? So you want to wait for price to properly show us its direction. So you may even see price coming down all the way to this price level, touching this trend line, consolidating a little, and then reversing or continuing its bullish move. So when this happens, you want to go long at the breakout from the consolidation, which will be probably over here. Stop loss is going to be underneath the consolidation, at least at the breakout. You can also put it way underneath the trend line, which will be a safe zone. And your first target obviously will be this highs. Then you can ride the rest of the positions as we go higher. So this is what I'll be watching out for on USD-JPY if I was going to trade this. Mind you, this is a 6 hours chart on USD-JPY. The reason why I'm using a 6 hours chart is because this is the time frame that fits the entire candlestick on my chart, so you can clearly see what I'm watching out for. But if I was going to trade this, I'm going to watch out for these patterns or these confirmations on the 1 hour to the 2 hours time frame, which will give me a better opportunity to take this trade at a better price level, right? So speaking about the risk to reward ratios. So that's it briefly for USD-JPY for my bullish case scenario. While for my bearish case scenario, it's easy to guess what I will be, right? So I believe for a bearish case scenario, following my patterns and the way I trade, I'm simply going to wait for a consolidation over here, right? So instead of getting a bullish breakout, then we get a bearish breakout to the downside. So if this happens, then you want to go short on a bearish breakout, which will take out the consolidation, which is also going to look like a bearish continuation pattern, and also take out this trend line, which has been guiding the current price action to the upside, right? You can see the bounces over here, 1, 2, 3, 4. So if we get the consolidation on top of this trend line and a bearish breakout, it means this trend line would have been invalidated for a bullish trend. First take profit target is going to be around this price level. Second one is going to be around this one. Third one is going to be around these price levels. So yeah, you see there are just many levels all the way down to this major area of support. So I don't think we're going to get here, but you never can predict the market, right? Market can move in mysterious ways. So that's it briefly for USD-JPY. One more thing to note is that in as much as we are trading around this area of value right now, waiting for a consolidation and a confirmation as to either going up or going short, price seems to have just been rejected from the lower band of the RSI, right? We just got a bounce off of the lower band of the RSI from being oversold. So there's a good chance we continue to be oversold, which will eventually probably lead price downwards before we see the bulls kick in, right? So that's the briefing for USD-JPY. Moving on, we're talking about GBP-USD. Nothing much to see here other than the fact that we keep reversing to the downside, going for a proper retest of this broken area of resistance. I've been talking about this for weeks, right? So patience seems to be playing out just fine. 4 hours time frame, as you can see on my chart, and I'm watching out for a good move to the downside, a consolidation, and a bullish breakout or a bullish reversal to go long. So my entry is going to be above the consolidation or after the breakout. Stop loss is going to be underneath the consolidation that leads to the breakout. First take profit target is going to be around these highs. Second one obviously is going to be around these highs, and the third one is going to be trailing our position as we go higher till these highs. So this is how I'm going to trade GBP-USD for a bullish case scenario, very similar to what we have on USD-JPY that we just discussed about a few minutes ago. While for a bearish case scenario, you can guess it's similar to what I'll be watching out for on USD-JPY. So move to the downside, a consolidation followed by a bearish breakout to the downside, right? So entry is going to be the breakout, stop loss is going to be above the consolidation, at least to the breakout, and take profits. First one here, second one is going to be this trend line. So this is how I'm going to trade GBP-USD for my bullish and my bearish case scenario. Guys, if you love this content, please like, subscribe, and leave your thoughts in the comment section down below. Lastly, we're going to be talking about crude oil. I won't be spending too much time on this because you know where I stand. We've been talking about the possibility of a reversal to the downside. So you have 1, you have 2, 3, 4. And you can see price clearly coming into this area of support, which is the lower bound of the symmetrical triangle, right? So I'm simply going to go down to the lower time frame to see what we have down here. So I'm going to show you what I'll be watching out for to go short. And the reason why I may not be taking this trade is because we are so close to the trend line already. So there's little or no room for price to move if we do get a bearish breakout, right? But either way, I'm going to wait for a consolidation over here, followed by a bearish breakout to go short. So this would translate to a breakout from this minor support level, right? So if this happens, then I'm going to go short. But I'm not going to go short if we just see price breaking through then, because that will mean my stop loss going as high as this, these highs here. But if we get a consolidation before the breakout, then my stop loss could easily be placed above these highs, and my take profit target will be around this trend line, while my entry would be after the breakout, right? So this is how I'm going to trade crude oil. I'm not going to go long right now. I'm only going to go long after we bounce off of this symmetrical triangle, which will give us another opportunity to review the market when we get there. So something like this, just to give you a quick recap. So I'm going to wait for price to come here, consolidate a little, and then reverse to the upside. So this is what I'm watching out for a bullish reversal for me to go long. Meanwhile, there's also a good chance we consolidate like this and I'll go short. So when we get there, we're going to review the market once more and decide where the market is going to head. But I think we're going to get a reversal though. But meanwhile, I'm going to leave that for next week's analysis. So that's it from me, guys. Once again, this week, tomorrow, we'll be launching our community-wide trading challenge for a chance to win $200. So there are going to be 3 winners. First prize is going to be $100, second prize $60, third prize $40. If you want more information about this and how to participate, use the link in the description below to join our Discord community for all the instructions you need to participate in this challenge. So that's it from me, guys. See you next week.